Well, Matt, great to get a chance for you and I to chat. I want to start off with kind of a 30,000 foot view of the world, how you see it. 'Cause there's so much going on right now in so many areas. It's tough to kind of step far enough back to get a good sense of it. So how do you see the world as it currently stands?
I think, from the 30,000 foot level, every area, I suppose, is unique in its own way, and then the more things change, the more they stay the same. I think when I look at the current era we're in right now, if I had to simplify it and then give some detail to it, I would describe it as an era in which kind of the lofty political office or the technological progression is outpacing maybe human wisdom or kind of emotional progression. And when I say wisdom, that's kind of a vague, opaque notion, and it's not meant to be Pollyannish, but wisdom to me is honesty, to the extent you can be as honest as you can, and accountability, to the extent you can be aware of mistakes made, and as transparent as possible. And I think this lack of kind of honesty and transparency and certainly accountability is uniquely a problem in the current era. And we see that in two particular areas for me, most obviously in the markets that I'm looking at and that we're looking at. I see that primarily in central bank discourse or central bank policy and the philosophy behind it and the politics of its language. And I think most recently in the tech sector, which is an easy target with the FTX disaster and the blow up there and personalities like Sam Bankman-Fried, those are easy targets. But it coming from 30,000 feet to 15,000 feet at the central bank level, ever since Greenspan, really, I've been watching these central bankers, and not just the chairman, the Bernankes, the Yellens, the Powells, but the Bullards and the Brainards and the FOMC members from different cities and different locations in the U.S. And I see a lot of platitudes and lofty language, clever words to hide really bad math. Mm-hmm. So there's not a lot of transparency in that. And the most obvious examples recently, of course, is this notion that inflation was going to be transitory when anyone on Wall Street or understood market flows and credit markets knew that was an illusion, that was a time buyer. So that was an obvious red flag of lack of kind of wisdom and transparency. The other thing, besides just the transitory myth of inflation, is now currently it's the redefinition of a recession. When I look at GDP numbers, or when I look at inverted yield curves at a lofty hedge fund level, these are obvious recessionary markets to me, and that's now being redefined. Even the way the Bureau of Labor Statistics is used by the Fed to come up with U6 unemployment or to come up with an inflation CPI or core CPI or headline CPI, again, it's not a conspiracy theory anymore. It's not being artificially bearish or tinfoil hatted, but the CPI inflation number is probably 50% underreported. And there's a reason for that. So again, whether it's the definition of a recession, whether it's inflation metrics or how inflation is reported, or even unemployment, to me, there's just a disingenuousness to it, a very politicized, independent, which is hardly independent, central bank. And of course, probably most obviously at the central bank level, is just the very notion that you can monetize your debt with money created out of nowhere with mouse click procedures, the Eccles building. Again, any of us who wouldn't want to or be addicted to a solution to a financial problem where you just push a button and produce income. You could pay mortgages, car payments, tuitions, vacation homes. Anyone would be addicted to that and use that. To call that monetary policy is, to me, openly dishonest. And yet, investors and policymakers want to believe in this fairy tale because it does work for a period of time until it ultimately debases the currency and they look for an extraneous event to blame it on, whether it's a war, a virus, or something. So that lack of accountability, that lack of transparency at the central bank levels, and again, picking on the Fed, but you can see that in the Bank of Japan, the ECB, and elsewhere, from Kuroda to Draghi to the new leaders. And so that's nothing new. At the tech sector, again, this is easy right now with the FTX blow up and the overpaid hubris of an individual, a young person like Sam Bankman-Fried. That's an easy one. But you and I have written about this and talked about this too. You look at salesmen, really, who are touted as geniuses, like Newman at WeWork, on that balance sheet, that overvalued balance sheet, and the arrogance in which he tried to list himself on the NASDAQ and set terms before the whole thing imploded. Or, I even remember from the campus at Harvard Yard that Zuckerberg was probably not going to be the best standard for social interaction, and yet now his company has gone up and down the roller coaster, which involved a lot of censorship, but he's touted as some kind of hero of the new age, a young, emotionally immature individual, in my opinion. And Bankman-Fried's no exception. At the older level, even an individual like Jeff Bezos in a company that violates every principle I studied in law school, at a fairly good law school, about antitrust policies or monopoly powers, easy access to cash to effectively become a modern day robber baron whose his income to median salary employees is over 1.2 million, where the average is 320 to 1 in America. 20 years ago, it was 32 to 1.
Yeah.
So you're seeing this amazing, grotesque lionization respect for people that I consider emotionally somewhat stunted, financially making headlines, considered success stories, but are really not bringing much good to the world, certainly aren't bringing transparency to the markets. And so this combination of lionizing tech heroes or looking at a central bank environment which has completely destroyed natural price discovery, natural supply and demand, the very notion of sustaining a bond market perpetually is the very opposite of everything we learned in school about supply and demand and fair competition and fair pricing. So that goes back to your original question, where do I see us in the modern era? I see technology and progress moving faster than human maturity, human transparency, human honesty. And one of the things that I like about working with partners for myself is, unlike, say, a managing director at a large bank, or certainly anyone in a political office, we have the right to give our opinions as honestly as we can, to have conviction in something. We're not flogging bonds for a private bank or a commercial bank. We're selling and thinking and arguing what we actually believe. Now, that doesn't necessarily mean we're always right, but at the very least, we'll be honest. Yeah. No one can say that they know the truth, whether that's a philosophical or financial question. Who's to be that arrogant? We can't say this is truth, but it certainly is what we believe. And I like how all of us come from very different backgrounds, different rivers to the same ocean. We look at the views of the markets and the views of precious metals or the views of politics from sincerity, not from any kind of angle.
Well, let's talk about the accountability part of that, because I'm interested in this, because there's a shift taking place, right? And you've characterized the situation very well. But if you look at the last year, we've seen, or the last couple of years maybe, we've seen Adam Newman fall from grace. We've seen Elizabeth Holmes fall from grace. Now we're seeing Bankman-Fried fall from grace. And so you're starting to see these big celebrity CEOs either fail, in the case of Newman, or be exposed for the charlatans and the frauds that they are in the case of Holmes and Bankman-Fried. Right. So does that signify a shift in that picture you've painted? And if so, what does that shift mean?
It signifies an interesting direction and an interesting other theme. When you talk about wisdom or transparency, you also have to talk about trust, right? And trust is another vague, opaque term. Yeah. It's kind of thrown around, certainly by politicians, like the word freedom or the word stability or the word democracy is thrown around and diluted from overuse, like it's an inflationary term. I think it's understandable that the average dentist, lawyer, bricklayer, accountant, plumber doesn't have time to get into PE ratios, central bank policies, or tech valuations. And I understand that. I certainly wouldn't pretend to be a pilot either. They've got years of experience. It's not something I want to do, but many people think they can understand markets by watching a sound bit or reading a tweet. And I think most people are generally trustful. But when they see headlines where someone less than 30 is arguing they're going to buy Goldman Sachs one day, the amount of arrogance that requires to make a market, which is basically what Almeida and FTX were doing, to make a market and then use client funds, it's the oldest trick in the book. It's overuse, it's a liquidity problem, and it's a misuse of client funds problems. That's a Lehman problem. And for this young, I think, arrogantly presented billionaire to make comments like that and then to be called out, even if you're an individual on the street who doesn't know everything about the balance sheet or the mechanizations going on behind the scenes at FTX or in the crypto space or on exchanges, you're starting to question trust now in these celebrity billionaires, these celebrity millionaires who usually had access to money or liquidity in an unfair way and became suddenly tech geniuses. They were the kind of guys that didn't get a lot of attention in high school or college, in my opinion, and suddenly are overwhelmingly powerful and overwhelmingly guided in how to use that power and eventually fall from grace, whether it's Jimmy Kane at Lehman Brothers, Dick Fould, Bear Stearns and Lehman, or whether it's an example like Sam or Zuckerberg or who else. Eventually, that lack of maturity, that lack of wisdom expresses itself through some type of failure.
We didn't have the fall of Dick Fould.
No.
We didn't have the fall of Jimmy Kane, right? We had the fall of Bear Stearns, we had the fall of Lehman. Now, we've had the fall of Adam Newman. And yeah, it was WeWork, but the story was the fall of Adam Newman.
Right.
Theranos was the story of Elizabeth Holmes. FTX is a story of Bankman-Fried. I'm just curious at that shift as to what it means that we've created this age of celebrity. We've created this culture of worshipping and deifying these rich stars.
Right.
And so much is invested now mentally by the public in their success.
Right.
When they fail very publicly and in many cases for nefarious reasons, that has to do some damage to the psyche of the public, right?
It's an interesting distinction you're making. It's not the institution, it's the individual now. We're not looking at Bear or Lehman, we're looking at the individuals now. And I think,
look, and if Tesla fails, which I expect it will at some point.
We've written about that too.
Right, but it will be Musk.
Right.
It'll be Musk's failure.
Exactly. That has a lot of ripple effects if you think about that distinction. It's not Tesla, it's Musk.
Right.
And if it's the same thing, it's a Hochmut kommt vor der Fall, we say in German. Arrogance becomes from the fall. This hubris comes before the crash. And this idea of lionizing individuals and giving them extra virtues and values and skills that they really don't have. They just have massive amounts of money and massive amounts of influence. When trust in those individuals fall, not just at the market level or the C-suite level of major tech companies or large banks, it also is in the Senate, the Congress, the central banks, and the White House, and at the cabinet and the parliament, et cetera. That kind of fracturing of faith in markets, fracturing of faith in central banks, fracturing of faith in each other and in politics can be a perfect storm. And again, that's not an exaggeration, it's not a doom and gloom notion, but you see that throughout history. It starts slowly and happens all at once. It's like Hemingway's definition of poverty. It starts slowly, then all at once. So the Nikkei 89, how can we get hurt if we're all crossing the street at the same time? And they slowly all got hurt, slowly and then quickly. The whole thing crashed. So it's not meant to be exaggerated or terrifying, but from low culture to high culture, low income to high income, people are losing faith in their heroes, in their politicians, in their states, and in each other. That's palpable in the US. We're becoming two very different countries. And the fact that Powell has so much influence over the markets and makes so much attention on where the stock and bond markets are going as opposed to natural supply and demand, and everyone hangs on the edge of their seat to see what the FOMC is going to say. These are all examples of distortion and new heroes, new personalities, who, if they're not wise, that amorphous term, if they're not honest, transparent, people lose faith. And when was the last time any of us, from Greenspan to Bernanke to Yellen, have seen a central banker apologize or say, hey, maybe that extra $8 trillion imprinted might have ramifications? We joked earlier, for Bernanke to win a Nobel Prize in economics, to me is, again, it's an opinion. I'm not a member of the board of the Nobel Party, but that's an insult. He should have gotten a Nobel Prize for fiction because I think his policies are going to have massive, and they already are having massive ripple effects. It makes you wonder how they could put him on such a pedestal. Is that a political reason to restore our faith in the personality of Bernanke, which is a symbol or an ambassador of the institution that is the Fed? But I think faith in all of those things is slowly falling. So better quickly inflate the Bernanke narrative right now. Just like we had to inflate so many narratives to buy time, as we've inflated bubbles to buy time and debased currencies to buy time. All of these things come right out of the Bernanke playbook, which he took to Japan before he was even a Fed chair and gave to the Japanese in the late 80s. We don't realize that. I think he's a weapon of mass destruction, his central bank policies. Again, that's an opinion. If I were a managing director of Goldman Sachs, I could not say that.
Right.
That's, again, why I really like being my own man with people who think, again, not always exactly the same way, but think openly and honestly and discuss and debate things.
Well, we've talked about faith, and we've talked about honesty, we've talked about trust, and this brings us neatly back to gold, obviously. And it's when we talk about trust and faith and honesty, gold has always been honest, faithful, true money that you can trust. So when you take that view of the world that you have, where does gold fit in that view?
Exactly. I mean, it seems like the apology of a gold bug. We always say it's been there for 5,000 years, and the Bitcoin or the crypto camps will say that's just an apology for an outdated relic, a barbarous relic. I understand that. It's not here in the place to get into a conversation about Bitcoin or crypto versus gold, but it is more than just a tradition or a relic of the past. There's a reason why central banks, especially now in emerging markets, but even in developed economies, are acquiring physical gold all the time and not cryptos, with the exception of some really sad cases, I think desperate cases. And the loyalty and the simplicity of gold, it's like a Chanel dress or a glass of water or a baguette. Sometimes simple is better. When you're really thirsty, nothing's better than water. When you're really hungry and the door done, a baguette is great. And a black dress on the right figure just always looks good. It doesn't have to be very complex. And to me, gold is not very sexy. It's not nearly as sexy in the volatility. It doesn't have a standard deviation of 170 like Bitcoin. It's much smaller, much calmer, but much more loyal over time. I think to me, gold was just an obvious culmination of everything I learned in the equity and risk markets, and particularly in the credit markets. And I think you can trace the direction of credit markets to why gold makes sense intellectually and financially, and not just as an apology for a gold bug based in Zurich, which is an insult to really what gold stands for. To me, and growing up after grad school, growing up in the hedge fund world of Wall Street, which was pure lottery ticket win for me, but it did force me to learn about the bond markets. And I look at debt. It's simple. You don't have to get into the complexities of arbitrage or spreads or yields or bonds. But just last week, the U.S. Treasury just added $1.3 billion in borrowing to their deficit. It's an indirect way of saying for the next 6 months we need another $1.3 billion. How is America going to pay for that? How are we going to, if we don't get it through GDP and we don't get it through tax receipts? That means it's going to have to be mouse click money. That's inflationary, and that's a tailwind for gold. But more importantly, it requires negative rates to pay for that. And if you have a negative yielding IOU from Uncle Sam, that's effectively a defaulting bond. So you're going to go to the bond market for safety when adjusted for inflation, which is misreported. You're losing money the moment you make the bid on the bond. So to me, gold is just a better, safer, more loyal asset, not just vis-a-vis the bond market, but vis-a-vis currencies which every day are losing their inherent purchasing power. So it's not a gold bug apology. It's not a get-rich-quick scheme. It's not a churn item you can use at a prop desk at a commercial bank. It's honest money. It's old for a reason. It'll still be there. And I think that right now you're seeing central banks all over the world taking advantage of the COMEX repressed paper price on gold to take physical delivery in their pockets, in their central banks now, so that they will eventually reprice gold to repair their balance sheets. To me, that's a way that gold can make you money. But I always looked at gold as insurance for money that was losing its purchasing power, for openly dying insurance. In a way, CDS was that for subprime. But CDS was then backed by AIG, which is also broken. To me, gold can't be manipulated in the same way. It certainly can on the COMEX markets, but that too is short term. Physical gold just gets the last laugh. It always has. I don't think it's any different now. It's just harder to believe. Maybe it's easier to believe now in the FTX climate, but I think Bitcoin will still have its days to come of rising price. But I just know that, in my opinion, Bitcoin and other cryptos will never be stores of value or mediums of exchange. It's just my opinion. We can debate that for hours, but I don't think they will be. I don't think they're going to be, but gold will be. And so I just see that as better insurance for openly dying currencies.